and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we're going to talk about the new Fed appointee. We're going to talk metals, interest rates, a whole bunch of stuff. Let's get into tonight's video. Welcome everyone to, sorry for the late start. Somebody made a funny comment somewhere that this guy has more technical problems than a Somali drug smuggling boat, and I think that's true. After the last update here, nothing is functioning. Of course, they changed functionality on the setup here. So anyway, glad to be here. A lot going on. I've been pushing out a lot of written material out of the Substack account. I did the basically going through market psychology in a special report last night. Probably the most significant report I did was last Sunday night when I put out the silver scenario, and that ended up to be spot on. And we'll cover the silver here in a little bit. So, but just know that the silver and metal debacle is not over. This was the beginning. So if you think it just broke and then you can buy it, it goes back up. Probably not. There's a number of things. We'll just start on that subject right now. The primary thing that we're dealing here is with some of the things I brought up in the article last night, and including in the silver article last Sunday, is markets don't operate on ideology, your commitment to a trade. It doesn't care about any of those things. And like I said, when the bid disappears on one of these parabolic curves, gravity takes over. And I think one of the quotes that I put out there is that when that happens and gravity takes over, gravity doesn't negotiate with you. It just drops. So typically in these parabolic curves, if you're up there, then that is really something that you need to pay attention to, because they just go vertically down. And so you get the big drop, you get what I call the echo bounce, and then we'll find out if this low we just had printed today is actually significant or not. And it usually takes the echo bounce and then a retest, and there's some arguments for it holding, but the problem with the rally that we just saw in silver was very being driven, by J.P. Morgan, all this noise about this, and they're going to remonetize the dollar using silver, and the central banks were buying it, and they were panicked. Folks, that's not how the markets work, and it's unfortunate. We've got this big megaphone out there, which is X. And you get all that and all the channels and the WhatsApp channels out there and trading. And you just got all these influencers that think they know what they're doing. I don't know. Give me a thumbs up if you've ever been in a bank trading room. I would like to see that. That's one of the things. We'll do like a kind of impromptu survey. And my guess is not many of you. There's a couple of people I know that have been around the markets and within the industry, but you don't know what's going on. And it's these, neither do all these influencers. And it's kind of sad in my way, because these people screwed up millions of people that bought into these scenarios, only to get hit pretty hard. And like everything, when silver went over 100, I mean, everybody was piling in. I put up this little meme. It had $20. There was one guy standing at this window to buy silver. At 79, it goes to 100. Everybody screaming buy, and somebody said, at least it's not a top. Well, they found out it was several days before the top. So here's the good news I want to tell you folks is I am working on putting out this. I want you to know that all of the data and the target zones for the exhaustion of a parabola environment in that type of regime, all of that was done from the indicators. So I'm going to hand out the script. It shouldn't take too long. You're going to have Claude. Should be able to get a freebie and do that, but you should be able. Somebody brought up a real good point. I think it was on X. They said, "Hey, so and so stocks up 300% and all these different symbols. Does this work with that as well?" And the answer is yes, it does. And so I'm going to give you that script. So if you have Claude, you have the indicators, then you'll be able to, and I'm going to do a video on how to use this code. So I'll pop it up on YouTube as soon as I get it done. It's virtually done because I've already used it. I just need to clean it up so I can hand it over to you and you can plug it into, drop it in a chat box and along with some screen caps and be able to run this thing. As soon as it should hopefully be done in a day by tomorrow this time. It's just going to take me a few more minutes to make sure it works. I've got some folks on our Discord that I can dump it over, and I know they have Claude, so I can see if I can get a quick beta test and then get it pushed out. But you'll need pretty much the 10 indicators that I put on the page each time. And so right now the setup that I have on the screen, the monitor, is a little bit different. So when I start to change screens, I might have a little awkwardness going on at that point. But this will help. As I talked about this on a stream last week, as you need to understand these parabolic curves and these spikes. And, when those happen, they detach from the normal, like all my PPMs and moving average. Well, the market, when it goes vertically up or down, actually, it detaches from its normal regime of understanding moving averages. They're no longer a conversation and people making decisions because they're so far detached. And if you look at that silver report I did, in there was embedded a snapshot of this dashboard that I created in React. And you can click on that, it will take you to an artifact, and you can slide it around and play with some of the volatility. But importantly, at the very bottom, it tells you which one of the triggers were triggered at the time when I put it up. And there was one where it was extreme detachment from the moving averages. Otherwise, you get about 2 to 3 standard deviations above the moving averages. And all that tells you is you're not living in the same world you were when we were within the other regime, which is a typical trending regime of trading. So I'm going to get that to you because I think that's going to be really, really useful, especially and I'll run a couple of these stocks that we'll find. Matter of fact, maybe what I'll do is ask you guys right now, and I'll make note of it. I've got my notebook open here, and just to see if you can tell me a couple of symbols that have spiked up pretty big, especially on a daily, and if it's an expanded trend where it's trending and then just goes through the top. Those are the ones I want. So if you know any of those symbols, put them in the chat line, and I'll be able to get to some of that stuff. So anyway, there's that. I'm going to bring the metals up a little bit. There's a couple key pivot points. Also, there's a couple key pivot points on Bitcoin as well. It's quite the disaster out there. One of the things that, if you get the newsletter, if you don't, it's kendallreport.substack.com, and it's Kendall, Kendall. And if you get the Substack, when I ran the data sheets last night, the first sheet, the S&P, when I put it in, I ran it multiple times because I thought this is a mistake. It was just lit up, screamed by. Unfortunately, I don't know when that should have shown up when I happened to take a snapshot and run those sheets with the data when the market was down close to the STX level. So those STX, which is the extreme projected for any day, typically are good buys for a scalp. This thing was just screaming buy. And you'll notice something about the Substack is if the data sheet's in green, then it means it has a positive bias. Normally that's for just a day or so. It's actually followed through because we were down 1.3% when I ran that sheet. And I was shocked when it came out. I looked over and it's green. I go, did that thing run right? So I wasn't sure. I looked at the numbers. It looked right. So I ran it again and it was. And the NASDAQ was the same way. And even the metals were flashing green, that there was a bounce. There was a bit of a bounce, and I'll save the metal talk for later. So let's just go to the proposed new Fed. And the title of this video tonight is they're already gaslighting this guy. He's not even been, approved by Congress or anything. And they're already talking about he's a hawk, and the markets are acting like he's already got influence. And listen, folks, it's amazed that this planet runs at all with all the noise. You have to sit around every day and try to figure out what's real and what's not, what matters. I mean, it's terrible out there, I think. And one of the things that I try to be really careful, I don't watch much of that stuff. I try not to read it. I try to spin over it. So old comment, this is funny, coming from a guy who writes a newsletter and does a YouTube channel, is funny what I'm about to say, is be careful what you read and what you listen to. I'm not a hypester. I do the math and the presentation I've been doing for decades and decades. I've been in the markets 46 years. I've been doing videos on YouTube for quite a few years. So, I try to keep everything really straight up and not get into any kind of hypester mode. And maybe I should. Maybe I need to convince you folks that maybe I've got this right. I put out a lot of content. I like the Substack environment. I got out the special report. I still do not have my annual report out, but I can tell you I'm closer than ever. I really got a lot of stuff done this last weekend, with the exception I fell into a mad scientist mode, which has been a bit of a divergence for what I normally do. But just know that this whole thing going on with this new, with Kevin Warsh is just laughable. I remember when we were shut down, the last time we had the full shutdown of the government for multiple months, what a wonderful time that was. We didn't have to put up with all the noise. Like, we've got employment numbers, and we're constantly flopping back and forth from macro to the short-term noise in these indexes all the time. And if you can find a way to isolate yourself from some of this noise, especially if you're trading the metals at all, I mean, this is just a nightmare. I mean, some of these people on the internet are quite articulate and very convincing. And the U.S. dollar is not going anywhere. I think it'll be digitized at some stage, whether it's through a digital dollar. Bitcoin's never going to become the currency. I see a lot of uses for the chain and for credit card transactions for some sort of digital. It's not going to, everybody think about what's happened since the adoption, so-called, we'll do air quotes, the adoption and so-called legitimizing the Bitcoin. It's been going down. It's been a bear market for probably 14 months now. Meanwhile, Tom Lee comes up every day and Saylor and the gang, and they're screaming about it's going up and it's all these things it's going to be that it's not and probably never will be. So the piece that I put out last night, which was on the understanding market psychology, it's basically a Bitcoin piece. I'm not really doing any predictions. That's what I do in the newsletter, but it does talk about how the influencers and the different phases that goes through when you get something is hyped up. And silver did the same thing recently. It's just got so overhyped and people running in and buying over 100. You had to ask yourself a simple question, and you should do this. Market was up 51% in the month of January. Why would you buy that? Up 51%. You don't think there's going to be, was the FOMO that bad that you were going to miss something? There's people out there talking about, 250, 1,000. Stop it. You can't trade 3 years from now. You can only trade now. And, even if you have a long-term view, it's pretty tough to do that, especially with Bitcoin. And I'll just make this comment right now while I'm kind of in this little rant is if you hold Bitcoin, you're actually, everybody that's the hodlers, right? They are making that market more fragile, not more stable. Why? Because this is what I've said on a couple articles I've written, is when you take all the pricing on everything, including silver and everyone else, at every market, any stock, anything you want to do, the float or the marginal buyers and sellers are the ones that are making the price. So if you're holding something, let's say you, instead of playing futures or anything in silver, you just bought the physical. Well, maybe if everybody does that, then you've created a shortage, but that action was not being necessarily created by the people that needed silver to build the things that everybody's telling you that, NVIDIA can't exist without silver and all those stories. Well, and Bitcoin, they're taking it off the market so that small marginal, we'll call it 20 or 30% of every market, doesn't matter, pick your stock, pick anything. Those are the people that are doing the price discovery. So you got to find the bag man. So you got to find a guy that Bitcoin trades 126,000. You got to find a guy to buy 126,001. And I think it was in this recent article I just put out, to get the price to go up. So look at it two ways. And this is still, I'm kind of on this kick about price discovery right now. If you have something like Bitcoin and you're trying to get it more, you have to keep finding more and more new buyers that come in. Right now, nobody's coming into crypto. But the point is, as that base so as more and more people so-called adapt it, it gets to the point where you have to keep, you don't need one more guy, you need thousands and thousands of more people to adapt. And so this tells you everything you need to know. I saw a little clip from Tom Lee going, well, only 5% of the people on the planet own Bitcoin. So that tells you how insignificant the asset class is. It's what, 1.8, maybe less than that, 1.8 trillion, was 2.2, it's got a haircut. But that just tells you how insignificant it is and how adapted, let's say, compared to US dollar and all that. So all of this talk of getting things off the market, buying physical, doing all that, it's a little potentially more effective in a physical commodity that you can touch. Bitcoin is completely worthless to even think like that. But if you're in silver, then there's some validity, because what actually happens is you are taking product off the market and you can create scarcity. But in the end, when everybody wants it, everybody dumps their cash silver, then the price is going to plummet. So in the end, you can't find someone that's going to want to buy it if everybody's selling. So it's just always supply and demand, and it's the sentiment of the market. And the difference between a physical metal and Bitcoin is Bitcoin drives completely on market sentiment. It has nothing to do at all with supply and demand. Supposedly the supply is limited. It no longer is. It's now unlimited because you can create synthetic Bitcoin. And that's why it's going down. You want to know why there's so many? Who's selling? Everybody but you if you're the holder. And the sentiment has turned very negative to the point where, look at Solana. What is it? Down 91% of its value or something. So I don't want to get any deeper in this, but it is important to understand. And so I'm bouncing back and forth. So back to Kevin Warsh. No, nothing matters that you hear about him. Don't even listen to it. I don't think it can materially affect market sentiment. Just because, one, he's not the Fed chairman, he hasn't been confirmed yet. There's no reason even to talk about the guy, but the media, especially channels like Bloomberg that hate Trump, they're just trying, well, Trump picked him, so he's not going to do anything you want. They're just gaslighting the whole thing. And no one knows what it's going to be like. And of course, he's not, the Fed's no longer independent. You're going to hear all that stuff. All right. So you guys put up with me for a long time on that. So, but this is important for you to be effective in managing your assets and doing those kind of things. All right. So, let me get a couple things. I didn't get up before we got live because I was having issues with this thing. So let's go over to the database. We'll go real quick. I should be able to get through this stuff fairly quickly. So let's go ahead over there and just take a look. Yeah, I've got some weird setting on here. Okay, not sure what's going on there, but so now I've got it, so I've got double clicking to get to where I want. Okay, so in the database, I want to show you the weekly database very quickly because we're at 66.71. So the database is still getting traction. And there's another reason why, that's yet another reason other than the sheets last night going, we're at an extreme. Market's not rolling over right now. Not at all. The fact that we traded down into 68 handle, I'm looking at 70.17 right now. Right back to almost making a new high. Those data sheets couldn't have been more accurate last night. And so we're 60. Let me just zoom in here. We're 66.71% right now. Let's just go to the all stats and look at what we had coming in. We'll look at the weekly. We had about 550 sells. Actually, it was kind of a rotation, was up about 1%. We had roughly about the same buys and sells that we had. In tonight's run, we got a lot of exits. This is kind of interesting. So let me zoom in here. You'll see this is daily models. So we had 1,200 sells coming in. Hang on. Let me flip this over. So we're starting to push a little bit up into the 50 percentile range, but what we've got is 46.16. And so that was like an old snapshot here. That's why I wanted to refresh here. So we got 525 exits right now. And then we've got about 560. So we had a slight little positive. So we're at 46% on the short term. So the rotation was slightly positive. But here's the other thing that's important. We have 9 sectors. Let me bring this up here. We have 9 sectors that are long right now. And so from looking at what kind of traction we have, now these aren't just symbols above the 200-day moving average or something simple like that. It is actually all of these stocks, 46% of this database. So right now, 6,578. This is on a short-term cycle, about a 35 to 50-day holding period. That's how many symbols are long right now, or 46%. So basically 50-50. That's a lot of symbols with traction and trending. And on the intermediate side, so weekly, that has holdings typically of about 200 plus days, that is actually pushing 66%. So there's over 60, obviously 65, almost 70% of every symbol in this database, 14,250 of them, is actually positive and trending. So that is not the kind of environment you're going to get where the market's going to roll over unless there was some systemic event that happened, maybe not a full black swan, but something that was unexpected. You're not going to get a rollover in this kind of environment, pushing 65% of all the stocks long. These trends, especially in intermediate, don't break down that quickly unless there's some systemic message there. So let's see, where are we at? Yeah, we're about half hour in. So let me just kind of go in there. Yeah, I see. I'm just looking at a couple of comments. Usually a bad idea. What's the chances of you got so many wounded bodies out there on this sell-off on Friday? There's going to be the old joke in the old days was there's stock ahead, which means there's plenty of people looking to flatten out a little bit. Typically what you're going to get is what I call the rebound rally. Could make a new high. Anything's possible, right? But typically what will happen is you get a bounce up, and I'm going to cover it in a minute, so just hang tight. So let's go ahead and let's just flip over here. So here's the rebound. This is right here where this market was. So this is something, listen, the indicators, and just if you had one indicator and you had the market grid, that's where these, let me blow this up, where these orange lines are. You can see anytime we penetrate below, it rebounds. Hang on one second. I got to get rid of this ringing bell here. It's making me crazy. Most likely it's folks signing up for the newsletter is what's coming in, but hang on one second. All right, thanks for that. Appreciate it. So, okay. So this orange line, if you look at this, and I talk about it all the time, historically, about 12% of the time, it will go outside of that orange bar up or down. But you can look at it just visually. Whenever it gets down there, you the market comes right back into the range again. So last night when I ran the sheets, it was trading down here at the orange line. It said full on buy the dip. Just everything was at an extreme. And I even ran, I thought I had made a mistake and ran a weekly chart, but this was on the daily chart here. So typically when you get out to that bottom range or the top range, you can take the other side of this market. It's very accurate. And like I said, it's basically 88% of the time you stay within those bounds. So when you see, I know there's a lot of talk on the Discord about this, but when you see SDX or an S3, which is one tick away from that extreme that's being projected that day, it's usually typically a good buy. And it was, so looking here, we continue. This is a boring story. I've been talking about it. We go all the way back to really late November. Look at this. We've been just flat. We're range bound. And the range bound has been basically the daily market grid. So buy low, sell high. So it's pretty simple right now. Last night was a buy low. We're close to sell high. And if we look at the algos below, you'll see the projections. The dotted lines are the projections from the PPMs. They're showing that and I've been talking about this, that the first 2 weeks of February look like there'll be some downward pressure there. So just pay attention to that, because that will keep us in the range. We're still got bullish numbers. They're at 0.25, so we're in upward trend mode. So there's going to be a continuation of a bias to the upside. So the buy the dip trade will continue. We're back into the moving averages. The red dots are projecting where the close is likely to be each day. And typically, we go S1, R2, R2, or R1, S2, those are kind of typical ranges. And in the data sheets that I put out, it's going to show you what those probabilities are for those numbers to be hit. So there's a lot of guidance. Just if you only had that, you'd be good shape. So, so this is how you get it. Just go to this site. So you can just go to kendallreport.com, indicators, and if that doesn't come up right, it should. Put out indicators 2024 on there, and that will get you right where you want to be. All right, so this, but it looks like we're hitting kind of peak values. We're probably going to come into these moving averages and move back and remain in this range. You may recall a couple, week before last here, this is a daily chart. So it was predicting that we'd come back into these moving average, and we did that. For the most part, we went from the lowest value last night to the top end of this range in one day. So it appears that we'll continue to work that range. NASDAQ, same way, same trade. But I mean, this indicator, I have to thank a guy that used to work for me, because I used to do this market grid by hand, and and I only did it for the S&P because it was a pain in the butt. He said, you should be able to automate this. And I argued with him, and then I realized he was absolutely right, that I could actually put some math, and I was able to come up with this solution. But range bound at best on all the indicators, on all the, not indicators, but all the indexes. All right, let's do. I'm going to put the 10-year up here real quick. 10-year has moved up to the upper bounds of 423. We've got some live Fibonacci targets here that I think we need to pay attention to, and that is going to be. Let me bring those up here. 432, 440, 445. This is where the fib targets. So this is part of the uh, indicator stack. This is the Fibonacci projection. So it actually has an algo in there that finds all the key high lows and does fib targets. So you don't even have to think. But this red dots are showing us that we're going to probably move back, retest these highs. That's going to be 432, 440 level. We could get up into this range, but 432. And as I talked about, it's interesting because folks think, well, the Fed lowered rates last week. Well, they actually lowered rates they didn't lower the rates on the front end, but they did the previous time. And why didn't the back end of the curve go down? And I've been talking about this for some time. The back end of the curve is going to stay up and move higher. So the whole idea that somehow lowering the Fed funds is going to get the markets to adjust on the back end so mortgage rates are cheaper and affordability and all the stuff that's being pushed around the street right now is not going to work. We'd have to do maybe 50, 75 basis points, and then that differential between the yield curve would bring us down a little bit. But it's going to be over 4% for some time. And if you look at the average yield on the 10-year, or it's around 6%. I mean, if you go back really long term and we were to bring up a monthly chart, you'd see the normalization around 6%. So the affordability is not going to come through interest rates. And that's what a lot of people are thinking right now. It's not going to be what happens here. And in fact, anyway, I won't go into this, but maybe one night on the front end of the video, I'll talk about the issues around getting housing more affordable, especially for first-time buyers. We'll do that one night, but this is not the time. But that's not how it's going to happen. And you don't want to kill the price. You could get BlackRock and all the hedge funds that bought single-family real estate to force them to sell it. Then you'd flood the market and you'd kill everybody's balance sheet in America that owns a house. So that's not going to work. For another time, I'll go into some details and what I think we'll probably see. Just so you know, I ran a hedge desk for mortgage brokers and hedging mortgages for years. So I've got a lot of insight in the pipelines and things that go on within the mortgage banker and within the banks. For the most part, all the mortgages are pretty much sold off to Fannie and Freddie. But anyway, I got to be careful. I'll fall into another riff here. So let's do this, and we'll go to gold here. So I will draw in. I want you to notice something. This right here, the algos are projecting, and they have been projecting even when I was doing this last week. We were starting to see things roll over multiple days ago from the algos have been projecting loss in momentum. So what we didn't know is we were just going to get a collapse in prices. So we saw the 3-day. So probably what we're going to get in the pattern here, this will be the same on silver, what's called a 3-2-3. Let me explain that. You get 3 days down, you get 2 days up. We should start to challenge some of these moving averages. This is gold, so we'll say 49.90 all the way up to this top Fibonacci and up here 52.50. That's, you probably get a rebound into there, and then what's being forecast this would be called the echo. Let me draw this in. This same analysis here, I'll just confirm it when we get into silver here in a minute. So you get this 3 waves down here. So you get this wave down. Oh. So we'll get 3 waves down here. Let me get this tool back up. It freezes the screen. So we get this, then we get this rebound. So we'll get the rebound up here, and then we should get another test of this low right here. All right. So this should come down. If it goes through, we go to the 200, which right now is 4,000. I don't think that happens. I think probably what we get is this. Let me back this out. We get this bounce up. We could go deeper into this, but what's going to happen is these market grid lines are going to come into play. So there's going to be a contraction. So we'll probably trade in between the market grid. I was just saying that 88% of the time the market will stay within there. So watch the market grid. And then after we get this test over here, that will be the point where, like over in this area, that will be the point where we decide which way that the market's going to go directional wise. So what we should be in is this consolidation. We'll call it kind of getting rid of some of the volatility, and then the decision will be over here, maybe after around the 11th or 12th of this month is where we'll finally get a decision somewhere over in this region over here, moving averages, whether we're going to break up or down. Right now, I think it's consolidation. We got the, what I call the volatility bubble in the market grid. And then from there, what we should get is literally just get some consolidation. So there's probably some decent trading going to go on in here. And this will be the same thing here. Let me just go over here. Same thing here. And you folks that have been around the channel know this scenario, what I'm about to paint in here, is that when you get to this type of configuration, what you'll get is this market grid will come in, but more importantly, this 10-period moving average and this 40, we should trade right where this red dot is being projected. This is the algorithms saying the closes are going to stay within this bound. We could go through it, but this market grid is just going to continue to basically consolidate around here. And like I said, then we get to figure out what the next move is. the most practical move, which is probably the 200, is there. So let me show you the key pivot point for if you're in silver. If you're trading silver, this is going to be the point you need to pay a lot of attention to. So this little dotted line right here is roughly 62.15.13. We'll just call it $62. If we take out this line, then we're going down to the 200, which is around 50. So this whole thing could retrace the entire value. So typically, at the end of a parabolic curve, you get a substantial correction, which feels like we've already had it. I think we get the bounce and then a retest. If it holds the thing up, yeah, I get volume all the way up. It should be good, Ben. But anyway, the ultimate pattern, though, I'll draw in one more that is probably, if we push the view out just a little bit, is that we're going to get the bigger, which is the 200. There's going to be a bigger wedge here. And markets could come all the way in and hold these lines, trade in some kind of consolidation phase. We'll see what happens with the market grid, but this is the bigger pattern. So there's two patterns. Let me draw it in. So there's this pattern here. This is the small wedge. This is where I think we hang out right here. And, that's pushing basically down around Friday's lows, in there. That's a little bit below that, but we should hang out in this range right here. So this should be the range we hang in for the next, I don't know, we'll just call it 5 to 8 days. We should stay in there. Then the bigger pattern that we're going to look for is going to be this one. Will be what I was just drawing. This will be the bigger range. As far as going to another moonshot, very, very unlikely. Can it happen? Sure. I mean, so many people got punished on that big reversal. It's going to be tough. Yeah, and there's like 4 solar. Just I'm not being a smartass, but solar panels are a joke, and drones. So are they. There's 12 solar panels and 10 drones. So those aren't big uses of anything. But that's how I'm seeing these metals right now. Yeah, let me write down those symbols that somebody, some of the chips and stuff. Bear with me a second. So it looks like MU, somebody put up there. That's all I got on volume, Ben. So I don't know if you can turn it up on your side. My meter's pegging out, so I'm not sure what's going on. One second, folks, while I'm getting some of these symbols out of here. Okay. Where are we at? About 50 minutes. Yeah, let me do this, and then I'll look at some of the questions and stuff you have. You can see right here, before I go off the screen, you got a nice bounce right off of that 40 average today. So that's pretty much in context of what I'm talking about here. So it's interesting. Bitcoin's the algos are putting in a bottom here. So it looks like so this looks pretty legit here from the standpoint of what we're likely to get is going to be it looks like we're going to get a bounce out of here on crypto. I remember just talking a few days ago that we had some downward projections. We exceeded everything. And this is kind of the pattern that we've been seeing, is just stair-stepping down. Whether this is ultimately it. What I'm looking for is Saylor and Tom Lee to stop talking. I mean, I don't know why anyone Tom Lee has just got to be up there with one of the most annoying people on the planet. He shakes his head and does little ticks when he's talking. Oh my gosh, I cannot watch that dude. It's crazy. Anyway, so looks like we're going to try to come back into the range a little bit. We'll have to get over the 10-period moving average right now, 83,473. So that's going to be kind of your pivot point on Bitcoin. I know everybody was telling me I was wrong a while back, but the weekly targets here was for a move. 78.10, this goes back to the first day of this projection was November 17th. So 78 was the target. So we basically satisfied that. What we hit here? We got hang on. We got we printed 74, and now the 200 is around 58. That is still in play. The only thing I would tell you is the weekly algos are showing that we're most likely going to bottom here. I think in the downslope of the moving averages, that's going to be your trend line. So same thing before this, 21 up here, 88, and with the extreme, if we did make a new low, it'd be 58, 59, and I would expect it not to stay there long. I believe Michael Saylor officially underwater. I think his costs is right around 74,000, so we're trading right in there right now. Okay. Okay, folks, let me take a look at some of the questions you have, see if I can comment on some of these things. Yeah, I don't know, India and China, they're not jumping in yet. And I think most of this rally, so I was talking to somebody earlier today, and I was talking about, he made the comment, Does retail have that much power? I actually think that this was a completely retail-driven rally in silver. Gold too, probably. Gold's got a little different fundamental background, but I think this was completely just a total hype job until they couldn't find a bag man above 121. And if you look at the silver special report I did, all of those numbers were not me making up numbers. As I said earlier in the broadcast, those were all math right out of the indicators that projected all of that. So that's key to know. Let me just look at some. Have not looked at natural gas. Yeah, matter of fact, that's my that's the one. Floyd Garage, you've been around a long time. This is not about you. This is me. Okay. Whenever I see somebody throwing the ratios out, that's just, it's like there was some guy. He had a bunch of followers, and it was gold lumber ratio or something, and he was like, that rules the world, a metric that no one looks at, and whenever I see spread ideas, and that's a basis for something. Anyway, I don't see those things being that important. Yeah, I mean, don't invest if you don't like volatility. It's 2025, 26, and all of the volatility is baked in. Yeah, I mean, this is all paper rally. Yeah, that's the whole thing. Yeah, so keyword in the next sentence, rumor was. Like I said, most people never, the banks don't do much in the metals unless they're guided customer based. So it'd be institutional producers. I mean, we ran, what year was this? 1991. A long time ago, ran a metals desk, primarily gold hedging desk, and we fought those. The reason why the miners never move is because they're always forward selling all their metals, and a lot of stuff is always already sold, and they're just taking pieces of the margin is all they were doing, and they'd sell it forward, and we couldn't even convince them. Just like, hey, it's a positive trend here. Just don't do that for today. And it was almost impossible for those guys. Yeah. Inflation's 2%. That shouldn't be too hard to stay above. Let me just look here. A couple more questions. Yeah, that's interesting. You guys don't know this, but I was in front of a group. I actually have a guy that I want to bring in on my podcast when I get that going, that he will be able to validate what I'm about to say. But I stood in front of about, I don't know, it was about 450, 500 people in San Francisco, and basically called the top of the, right before the collapse of the Japan market. Because I talked to him a couple of months ago. He goes, yeah, you called it. He goes, they're finally taking out the high that you called many years ago. Yeah, I did do, let's see. I did gold. Yeah, so a lot of these markets, the 1040s are going to be kind of the place where we're going to trade in some of these metals here. Just let me keep looking here for a minute. So much for turning that sound down. Thank you, whoever bought Um, yeah, we'll take up some of these other markets. So show up and we'll go through like natural gas and some of this stuff. So yeah, not a lot of questions. Sorry for the late start. It's right at an hour, so we'll get out of here since we started late. But I'll try to be on time tomorrow. I plan on being here tomorrow. Um, yeah, there's a whole section on gold. Basically, it's got all of the metals. I would say are going to be range bound. What somebody just said, probably the value of the 10 simple SMA and the 40 on both silver and gold. We should stay somewhat in that range. But more importantly, if you have the market grid, then just expect for it to stay within the market grid. And what I've got up here, what I had up there a minute ago on Bitcoin was the weekly chart. So, just know these intermediate charts, for the most part, forgetting the metals, the markets are going to be range bound, I think, here, probably going through February. Like I said, ignore anything you hear about Kevin Warsh, because it doesn't matter what he's done yesterday or 3 years ago or what article he wrote back in, 1982. He's not that old, but you know what I'm saying? It's just like, that stuff is, he's not the Fed chair yet. He's got to be confirmed, and you've got people out there that want to block anything that Trump does. So we'll see how the confirmation process goes and all of that. But anyway, folks, I think that'll do it for tonight. I appreciate it. Sorry for late start, and some of the transition issue is a problem here. I'll get all this fixed by tomorrow night. I walked into thinking I was on the old platform, and the update, they changed some stuff. So anyway, thanks again, and we'll talk to you soon. Make sure you hit the like button, subscribe, all that stuff. And I'll see you tomorrow night. Have a great evening.